right, so Michael and I have been friends a long time, going way back to Goldman Sachs days. Tell us about the state of the world. Let's start with the state of the world. You and I have done these SALT presentations. You've been a guest of mine on Wall Street Week, and I think you have probably one of the best macroeconomic senses. So tell us where we are right now, Michael.
You know, the world is scary in lots of ways. I often think growing up, I would watch James Bond movies and, you know, they'd have the table with Spectre around and all the bad guys. And now I'm like, geez, that looks like the world leaders of today. You know, if it's Putin or Orban and so we don't have the stability that a lot of us grew up with politically. And economically, you know, things are constantly in flux. Listen, the U.S. economy in lots of ways is strong, right? We've got close to full employment. We continue to surprise macro thinkers how strong the economy is. To me, it's pretty simple. We've got a government that can't keep its pants on, following another government that couldn't keep its pants on, and we're spending 6.5% more than we're taxing. And so when you run 6.5% budget deficits, that's a lot of growth, right? If we were running a 3% budget deficit right now, we'd have flat growth or negative, but at 6.5%. Why is that important? Because we're currently spending about 26% of total GDP at the federal level. In 1984, my first real job other than being a gardener, I worked at the Office of Management and Budget under Ronald Reagan. At one point, I was a little more Republican. And I learned...
Stockman was OMB director at that time?
Excuse me? Who? Dave Stockman was in charge. And I learned back then the federal government is allowed to spend 20%. And they try to tax 20%. So if there's one lesson to take from this talk, it's the bellwether between Republican and Democrat was you get a 20% of GDP budget. Bill Clinton was the only president that taxed 20% and spent 20%, right? 1999, part his doing and part just luck that we had the tech bubble. But you try to keep that close. And what happened in 2015 with the rise of populism in this country, right? First you had Brexit, then you had Trump. Trump, really the first populist president of our lifetime, followed by Biden, another populist president, is they took spending up first because of COVID and then just because. So now federal spending as a percent of GDP is roughly 26%. That's 6% more than it should be.
Is that contributing to the inflation?
100% is contributing to the inflation, and 100% is contributing to why most macro traders have been wrong and thinking, oh, the economy is going to slow. The economy is going to slow. It's not slowing because government spending isn't that cyclical, right? If you think about what we did with Build Back Better and the Inflation Reduction Act and the CHIPS Act, this is like a Chinese 5-year plan. We're going to spend this money over 5 years, and it's a lot of money. And it doesn't matter what the interest rate cycle is. It doesn't matter. It's getting spent. It gets into this machine that kicks it back out. And so, that crowds out some other investments, so you have some inefficiencies in the market. But broadly, it's keeping our economy afloat.
I'm going to make you Fed chair for a second. You've got this fiscal spending that you're describing. And you're watching some numbers. I mean, it looks like the inflation data is ambivalent, right? Some of the numbers look very good, like they're trending down, and then you get these pockets of rising wages, which would have to have you concerned as the Fed chair. But yet still some of us market participants believe that the Fed is going to cut rates a few times this year. Where are you?
So Chairman Powell wants to cut rates a couple times. I think as he gets towards the end of his tenure, it will be the exclamation mark. I did my job. And he also is looking at, right now, we're basically 5.25% times 35 trillion, growing to 36 trillion in 100 days, growing to 37 trillion in 100 days, going to 38 trillion in 100 days, right? We are in the middle of a death spiral, and no one's talking about it. And so if I could cut rates to zero, feels a lot better. I'm financing my debt at a lot less cost. And so part of the reason he wants to cut interest rates is less debt service, right? The Fed is losing a fortune every year for the first time. So you're running it back. And it's like, how'd you do this year? Because the Fed is a bank. Oh, I lost $100 billion. Thank you. The problem is, whenever you look at financial stewardship of a country, there's two sides. There's the Fed share and there's the Treasury. The Treasury, which is an extension in lots of ways of what Congress wants. And we've got a Treasury Secretary, Janet Yellen, who has shocked me in how political she's been, how bad she's been. I mean, Janet Yellen might go down as the worst Treasury Secretary in our lifetime, right? We have a crises level deficit and she hasn't said a peep. Peep. Janet Yellen is a very smart woman who has been a civil servant and a public servant her whole life, who gets it. But because of politics, she hasn't said a thing. And so we're running this gigantic deficit. We are stealing money from our grandkids at an accelerating rate. And it's unsustainable. And it's why gold is higher today, and silver is higher, and copper is higher, and palladium and platinum and stocks are all higher, right? Yellen is doing the twist. She's issuing short and buying back long, in essence, right? Keeping rates artificially low. It's made fixed income trading boring, right? If you would have had a good idea this year, you would have been short volatility in fixed income, short volatility around the yield curve, and the relief valve is higher stocks, higher commodities, and that hurts working and middle-class Americans full stop.
So we're gonna hear from General Milley tomorrow. Obviously, Secretary Esper is here this afternoon. You're a former veteran, U.S. Army helicopter pilot. What risk, geopolitical risk, is out there that the media is not writing about, research analysts on Wall Street are not writing about, but it's something you think about?
Well, listen, I mean, we had the if you're an Iranian hardliner, the tragic death of the Iranian president, and if you're an Iranian dissident, you're probably shooting off fireworks in Tehran like we saw. And so we'll see what happens with, some instability, if there is some in Iran. I think one of the risks around this election, right, if you think about people like Milley and Esper and Kelly, four-star generals who are centrist at their core, military guys are centrist at their core, who are coming out and saying, we think there's a real issue. It's an existential issue if Trump gets elected. And what I've been spending time talking to these guys is that what you don't realize is the Wall Street version of a four-star general. If it's Stan Druckenmiller or Ray Dalio, or they see this budget deficit and this death spiral and the debt as just as existential. And so we have the security world really, really nervous. Why are they nervous? They're nervous that if we pull out of Ukraine, if we pull out of NATO, that stability comes from these relationships that we have. And who knows what Trump will do if he gets elected. And right now he's certainly the favorite. But that uncertainty gets them very, very, very nervous. Right. Nervous enough that apolitical guys are willing to campaign. That's a big, big deal. Who will be better for the budget? Biden, who has proven to be terrible. Trump, who was horrible, but now will he wake up? Will Scott Bessent be in his ear? Will John Paulson be in his ear? Will he put some? It's a hard call, but it's interesting because when I'm in D.C., it's all about security. And when I'm on Wall Street, it's all about the economy. Right.
I don't go to D.C. much because when I'm there, it's usually a short stay for me, so I don't really have a great time in D.C. But when I am there, I am blown away at the lack of understanding of that deficit, meaning $1 billion here or $1 billion there, and they literally have no regard for it. So let's say you had a local congressman, or not really local because it's a representative in a district, and you had to grab him or her by the shirt lapel and said, okay, this is the reason why the deficit is a problem. It's because...
Listen, I've had these conversations. What has shocked me, because when I went to D.C., I was a middle-class kid. I was kind of naive. My dad had a friend that got me the job. My dad had gone to West Point. And I just assumed every congressman and senator knew what I was learning. Like, this is your budget. And between sorry about that.
That's your congressman calling right now.
David, start paying attention.
Doesn't want you to give him up.
Well, I think between the polarization, between the quality of candidate that we've had over the last 20 years has gone down from where they had been. When I say quality, it's background, it's breadth of knowledge, it's experience level. I mean, we've got Marjorie Taylor Greene, and so when I have these conversations, I am shocked that I feel like I'm speaking Swahili. I'm like, guys, you're spending. And so if you're on the progressive side, you're like, yeah, but we need that. We need that. We need to forgive student debt. I was like, all those things could be unbelievably smart ideas, but you've got to take from somewhere else. And there's just not a sense of fiscal prudence. And so I don't see where
you would say that's an indictment of both parties at this point.
Both parties.
Yeah.
It's really scary for us as Americans. Now, listen, if you're in this room, probably you will do fine because someone will tell you to buy gold, silver, copper, and equities, and you'll be in the right funds, and your asset prices will go up, as they are. Stocks go up every day. But most people in America don't own gold, silver, copper, equities, right? If you're 26 years old and you want to buy a house, just 12 years ago, the average house in America cost $190,000, and today it is $410,000. Like, think about what I just said. 12 years ago, you were starting as a 25-year-old at Anthony's shop. His salary's not double. You're probably paying 20% more. But the house is double or more than double, and the mortgage is a lot more expensive. And so both inflation and asset inflation really are like stomach punches to people that don't have assets.
When you left out what Michael Saylor calls digital property. So let's go to Bitcoin for a second. You own it. I own it. Were you nervous when you bought your first Bitcoin?
And this is going to sound maybe cocky or arrogant, and I apologize. No, because I was already really rich. And so I bought a lot of Bitcoin.
I didn't find that cocky or arrogant. I want to hug you. I was fine. I mean,
but because as a percentage of my net worth, it wasn't a big bet. It was intellectually interesting. I maybe put myself out, in front of the crowd before others, and so had reputational capital at stake. But financially, it was never a painful bet for me.
So let me rephrase the question. You are a renowned institutional investor. Worked at Goldman. You were a partner at Goldman. You built Fortress. You created Galaxy. A lot of people think you're a visionary. I think you're a visionary. You buy this thing that people don't understand, and there's a very large group of traditional finance people that don't like it. They call it decentralized pet rocks. They call it Ponzi schemes. Elizabeth Warren, a former Harvard Law School professor, I mean, she hates it. I mean, forget about her, right? So how do you negotiate yourself through that group of people, given your status?
What's so interesting about crypto, and Bitcoin specifically, right? If you take for a second the premise that Bitcoin is digital gold, and the growth of it is a function of adoption. It's a function of people having it explained to them and believing it. And so by definition almost, Bitcoin is sold, not bought, right? You get orange pilled. And so I'm a sales guy at my core, even though I make more money trading. My mom was a salesperson, my brothers, my sisters, we're a family of salesmen. And so it was very natural for me, once I thought this makes sense, to sell. And, I said this recently on TV. I was like, Jamie Dimon was calling it a pet rock, and Elizabeth Warren. I said, guys, the arrogance that's coming out of your mouth is shocking, right? Ray Dalio, Jeff Yaz, Abby Johnson, Paul Jones, Stan Druckenmiller, some of the best investors of the world, Pete Brigger, Mickey Milker, they all think there's value, but you're smarter than them. Yep, Elizabeth, you are so much smarter than all of the best investors in the world that like it. I was like, you don't have to like it, but don't be so arrogant to say it's not worth anything, because that group of people saw worth in it. I saw worth in it early on because I thought this was an idea that would catch fire. It was an idea that would catch fire because Satoshi saw populism coming. The moment Brexit happened, it was the best thing for crypto. Populist governments spend too much money. That's why they're called populist. And we have a populist wave going around the world. We lost our we had a North Star before 15. It was called globalization. We believed in it collectively, rightfully or wrongfully. The world believed in globalization. And with Brexit, globalization fell apart. Now we're talking about resourcing and a war with China. None of that was there. And so we've created this political and economic environment for Bitcoin to thrive. And it's why I was talking about gold and silver, for hard assets to thrive. And Bitcoin is a digital hard asset that is beloved by hundreds of millions of people right now. What we're seeing in DC right now, last week, was the Democrats finally waking up a little bit. I mean, I've been down there so much, and I am more of a Democrat than a Republican, but these days I'm pivoting more to becoming a radical centrist. Because of Elizabeth Warren and the power she's had around the financial decisions in DC, in the Biden administration, it was like Democrats don't like crypto. And I said loudly and publicly, I was like, guys, there are 65 million dog owners in America. There are 85 million crypto owners. And right now, the Democratic Party risks being the party that doesn't like dogs. We hate dogs. I was like, you can't just hate crypto. And, you know, on the same day that Biden threatened to veto this arcane accounting rule, Trump came out and said, I'm your crypto president. And it has almost become a purity test now in the crypto community. You know, Republicans like crypto, Democrats don't. And if you don't vote for Trump, you're not a crypto person. And so the Democrats last week, for the first time, we had a bipartisan vote where 10 senators crossed the line, and I forgot what it was, 20 congressmen.
20 congressmen.
And so...
Will President Biden veto this?
President Biden will probably still veto this bill. We'll see. I hope he doesn't. I think it would be really foolish if he does. But, you know, the way politics works is they say, if I don't veto it, I'm going to make those congressmen and senators that we told to vote no look stupid. And those are my base. And so it's like, oh, come on, what's the right thing to do? For God's sakes, it's just not the way DC functions. And so we'll see. We'll see. There's going to be a lot of lobbying. There's another bill on stablecoins coming up. There's another bill on market structure. Hear me loud and clear. Crypto needs both Democrats and Republicans to understand it and to push it forward, right? It can't be a technology of one party. It will stink for the crypto industry because these elections are going to go back and forth for a long time. And crypto at its core, any technology should be mostly bipartisan. Right? Crypto has a little for both. It's got the libertarian streak of Bitcoin, but it's also got the progressive streak of cutting out the middleman, of cutting out banks, of cutting out music publishers, of cutting out all kinds of rent takers. And so why Elizabeth Warren decided she hated it is a mystery to me, but we've got to move beyond that chapter.
So I pointed out when I walked on stage that Bitcoin was at 26,000 a year ago at the opening. It's roughly 67,000. Are you surprised by that? Are you surprised by the influx of capital into the ETF?
So listen, we kind of had a perfect storm of, there was terror because of a lot of bad behavior in 2021, right? Froth and then bad behavior, plus the Fed raising rates. And so we would have gone down anyways without Sam Bankman-Fried and Do Kwon and all the other, you know, BlockFi and Celsius and all the other problems just because of the Fed raising rates. So we were starting from a distressed position, and then we got the ETF approval, and it can't be understated how important that Larry Fink, the single largest wealth manager in the world in history, who had been negative 5-6 years earlier, got orange pilled and said, actually, I see what these other people are seeing, and I think this is an asset that should be in lots of portfolios. And so while there are 11 ETFs, it was really Larry that made it easy for all of you guys to put some Bitcoin institutional investors in your portfolio. And that process has started, and that adoption process goes slowly. At the same time, we had the halving, which is another, you know, the inflation rate gets cut in half. So imagine you got an asset and you say, guys, guess what? We just cut the inflation rate in half. And but the inflation in your other asset, if it's dollars or euros or yen, that's pretty high and it's growing, right? So you've got a deflationary asset versus inflationary world. And so we had a nice run, and, you know, prices are always set on the margin. there aren't that many sellers of Bitcoin. So many people who own it, who bought it, they believe in it almost religiously. So Michael Saylor's never selling his Bitcoin, which is very different than most assets, right? These guys think of their net worth and how many coins they own, not how many dollars they have. Now, that's not everybody, but that's a big core. And so you don't see a lot of turnover. And so, listen, we're consolidating here. We'll see what the Fed does. If the Fed starts pushing rates down, you're going to see crypto go higher. It might grind higher anyways, just with the belief that gold, silver, we're starting to lose faith that this, stewardship that we have in the U.S. economy and the global economy is going to be good. And that's what the prices of precious are telling you.
One last question. 26,000 in 2023, 67,000 today. We opened this conference in May of 2025. God willing, we're all here. Where's Bitcoin?
Listen, price predictions are hard when you take out old highs. And so I do think we'll take out the 73,000 high before the end of this year and probably finish 100 somewhere in that zone. But a year forward from that, if I look at the market cap of gold, right, and Bitcoin at 70 is about 1.4 trillion, and gold is probably 13 or 14 trillion right now.
Or actually 15.
15 trillion. And so we're 1/10 of gold. As baby boomers die and that money comes down to Gen Z and millennials, they're going to like crypto a lot more, right? One thing you notice is the people that hate crypto usually have a lot of gray hair. And so, could we be 25% of gold in 2 years? Maybe. That's a lot, but maybe. But I would bet you in 10 years, we're 100% of gold. Or 15 years, right? This trend isn't going away.
All right, since you're a salesman, I'm a salesman. I don't want to sell through the close. Michael, thank you very much.
Anthony, thank you.
Great to have you on.